Good evening, rock stars and warriors. You made it to the final day of this intermediate class, and I want to say a very big congratulations to you for making it here. A lot of people left the group. A lot of people were not interested. A lot of people were affected by the attention span, the low attention span that the internet and the noise around has cost us. People cannot actually stay at a place to learn a thing these days because they have very little attention span as a result of all the things that they've watched, they've heard, and they just can't stay at a place and learn a thing. So, and it's very, 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 very poor. But it's an interesting period we are at right now. Any information you need is online on YouTube, on Google, but the fact is that a lot of people cannot even, do not even know that this information are there. And even when you give it to them, they cannot concentrate to learn them. So if you made it till this point, I'll say thank you and I'll say congratulations, because you are different. You are super different. Tomorrow you are going to look back and celebrate me for what I've just done. Not because this alone is enough for you to start making those millions and billions, no, but because this is like a foundation. Anybody who took our beginners class and took our intermediate class can successfully say that he's no longer a newbie, he's no longer a noob. So all you need now is just to venture in and make your own mistakes and make your own successes and all that, because those things must come. The only way it cannot come is if you have someone who is holding you by the hand, more like a mentor. So when you want to do something, you ask questions and the person will say, yes, it is right, no, it is not right, based on the experience, depending on how many years the person has been in the industry. Okay, been here for so many years. We actually know what works and what does not work, actually, to an extent. Not like we know everything, no, but we are still learning. Every day we learn, every day we keep learning. And from what we've learned from the past, remember that you use the past and the present to determine the future. That's how it works, even in trading. All these indicators, all these tools that we share, the way it came about is someone just thought out, sat down, analyzed charts, and said, because of this and that, I think if this happens like this, it's possible that the chart will go like this, and then the person will come up with a theory that people will test, and if it works out majority of the time, it becomes an indicator or a tool that people will start using to predict how the market is going to move. That's how it works. And there's no indicator, there's no tool that is 100% sure, and that's why we teach that you learn as many as possible, so you can be able to confirm with other ones and at least have winning trades most of the time. If you have 10 trades and you're able to win 6 out of that 10 with a good risk reward strategy and position sizing, I tell you, you are still a profitable trader. Most people go as high as 8, some 9 over 10, but you can never see 10 over 10 like 100% all the time you're winning the trades. It doesn't work like that. You must have winning trades and bad trades. But what we are saying is, let the winners, be big enough to cover up for the loss and also give you the profit you need. So at the end of the day, you calculate profit is profit. You know how many percent of your portfolio you've been able to gain in a particular period, either weekly, monthly, yearly, depending on how long you want to be an investor. Okay, as you can see, some of the researches I'm making here, I'm actually going real deep into Berkshire Hathaway, okay, the investment company owned by the Oracle of Omaha. What's that his name again? Warren Buffett. Okay, so because I have this big dream of having, owning a capital firm that would be huge, like in funds, my personal funds and investors fund. And I've been researching on this and I've been working on it for the past 2 years. We'll go live very soon, probably in the next 1 year and a half, hopefully, because I don't just want to launch something that I'm not prepared for. So I'm doing all the research. I'm a lawyer by profession, I've taken the legal aspect of it, learned everything I need to know about the legal aspect of an investment firm, managing a capital firm. So, and still learning more, Securities and Exchange Commission, not just about Nigerian market, but the world economy, the world market. And when that comes, I hope that the Lord is going to help me, for this. Because it's a 50 years run. 50 years run. We're looking at the 50 years time. The only thing that will stop me will be death. And I pray that death will not come in the next 50 years to build the company of my dream. So let's get down to it. Okay, today we'll be doing coin analysis, to wrap up this whole thing. A lot of things I'm going to talk to you about today might not be in depth, but if you pay attention, you pick it, even with this small explanation I'll give. The in-depth of all these things will come in the advanced class, and the advanced class is not free. Actually, we're picking people, but trust me, the value is massive. The value you get in the advanced class is massive, and we have 100% refund rate. Like, if you're not comfortable with it, if you're not happy with your earnings, you ask for a refund, you get it. It's that simple. Going forward, that's how I want to build this business. There's no konokana or anything. When we say let's say you opt into our mentorship / coaching, we are burning our time to make sure you're profitable, to make sure that you are a good trader. That's how it is. If it is signal, we are burning our time to make sure that you get the best of it. That's how it is. Okay. And if it is just about training, you just want to get like full-time training, either one-on-one, like advanced, get to learn these things step by step and on the job, like we do it with Zoom, live trading and training. You learn how these things work. That's also fine. We burn our candles for you and also promise you 100% refund rate if you're not comfortable with what we do for you. Okay, but that's it. We'll still give you more updates on the advanced class, but let's get down to what we have today. I want to talk to you about coin analysis. Generally, how do you actually analyze coins, to enter a trade and be profitable? There are many ways, okay, and there are things that you need to pay attention to, and one of it is the fundamental analysis, the technical analysis, and the sentiment analysis. Most places you go in the internet, you have just the fundamental and technical analysis, so I'll just explain it for you. But I added the third one, which is the sentiment analysis, and I'm still going to explain that to you. Now, when we talk about fundamental analysis, just know that fundamental analysis is all about news. It's all about news. It's all about news, information. Okay? The market, the world is moved by information. That's the truth. If you don't pay attention to the information that is being churned out as it relates to your investment, you're going to be making mistakes. There are informations that will come, and because of the fact that you heard it on time before it gets to the public, you make investment decisions that will favor you, that will give you like tons of money. Some people might decide to call it insider information, like getting information that it's not meant for you. Remember how a company is being built. It's built in such a way that there are people who are managing the affairs of that company and doing what they can to make sure that that company stays profitable. And then if they offer their shares to the public, maybe it's a public company. Now the public will actually be making decisions on buying and selling according to what is happening in the company. That is 1. 2, according to what is happening in the world. 3, according to what is happening in the economy of that particular, the base of that company. So it's not just about the company, but the company also matters. So when people now go to the extent of going inside to go and find out, for example, a company wants to declare their dividend, like they want to close their book for the year, and somebody already know that this company is running at a loss and that these people are going to declare in the negative to their investors, and that it's possible that the reason why the company is in the negative is pretty bad, that people might just panic and say, no, there's no future for this company again, I want to sell my shares. So that person who had that information on time might decide to just go to the market and dump all his shares. knowing really well that that is exactly what might happen in the market, and wait. So when that information gets to the shareholders, everybody will now be scrambling around to go and sell off. By that time, he sold at the high, like when there was no panic, nobody knew that anything bad is going on with the company. So he will now wait, hold on and wait until when these people now start rushing to sell, everywhere will just dump, and then maybe probably, let's say a share that it was worth $5 per share will now be worth like $1 per share. Remember, he sold at $5 per share. He will now come back and buy maybe half of that portfolio, or even the same portfolio he had before, okay, with just 1% of the money, like a certain percentage of the money. The other one is pure profit, and he will still have it. Then it's possible that that person still believes that the company can, rise up again, and then it's possible that that $1 shares can rise to $3 in a short period of time, maybe 2 years, 3 years, and that person is in huge profit just because of that insider information he got. But insider trading is evil. It's bad, actually. It's a crime. But it's not a crime if you are able to source your information the right way, like you didn't do anything illegal. Okay, so how do you get this information? On the internet. When you see people on Twitter, for example, when the oil price tanked, that was the US oil, crude oil price, it tanked. It was all over the internet, it was all over Twitter. But then that one is just the news, because most times what we apply in this industry is the rumor. You have to get the rumor before you get the news. For example, when that happened, there was a rumor that it's possible that the stock market will crash, and it's possible that the crypto market will crash. So that was the rumor. Anybody who knows how to analyze would be very, 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 very careful on how he trades right now. No matter what your technical analysis is telling you, you have to also pay attention to the fundamentals, which is that since the US oil price tanked, and then the other oil, the Brent, okay, is also going down gradually. That is possible if all these bailouts that is coming from different countries of the world cannot sustain this market. It's possible the stock market might crash, right? So if it crashes, and it's still possible that people will be afraid and they'll start withdrawing their money from crypto, and that your technical analysis will just not work. The fundamental will take over, and there will be like a panic selling, and everywhere will go down. So what do? You're also watching your technical, but also pay close attention to the fundamental. Now there's a rumor. That's just a rumor. It hasn't happened, right? And we're praying it doesn't. But this industry is not about prayer. You have to pay attention to other markets, like the stock market, the US market, the Chinese market, all these big markets that can detect how people react in the world. You have to pay attention and see how their market is going. When you notice anything, you now gauge, how will you ask yourself, how will this thing affect my market, my investment, negatively or positively? If it is negatively, what do? You sell and then hold, like cash is king. You keep your cash in a place that is safe. In our case, in a crypto world, it's USDT. You save it there, or you can withdraw, put it in your bank account, or maybe diversify your investment to other places, right? And if it is a positive news, what do? If you have more money in your bank account sitting doing nothing, what do? You use it, buy more, and hoping that news is going to push this price, that rumor, when it now comes to the general public, is going to push this price up, and people will be panic buying, like they want to buy that fear of missing out. They don't want to miss out. And when they start doing that, what happens? The price just goes up, and then you take profit. So that is it about the fundamental. A lot of things you need to learn about fundamental, how to get your news, but that will be broken down like piece by piece to anyone who makes it to the advanced class. But for now, just know that fundamentals is all about the news, and that you don't pay 100% attention to the news. Also think about how you can get the news before it happens, which is the rumor. Okay, you actually buy the rumor and sell the news. Buying the rumor is that it hasn't gotten to the majority of the people out there, so you have taken your action. Now that action could be either positive or negative. If it's negative, you're selling. If it's positive, you're buying, right? So now when the news now comes out, people will start taking action. But you, who is, like they said, the early birds eat the fattest worm. So You who entered first or exited first, you would be the among the top people to make the most profit out of that circumstance or situation. So that is about fundamental analysis. So let's talk about technical analysis. So technical analysis is more of the chart aspect, like using the charts to predict what you think will happen in the future. And the best place to do your technical analysis is on tradingview.com. tradingview.com. That's where you do all your charting. So you read your candlesticks, you do using your indicators and all that. And we actually handled it in the intermediate class, some of them, and we handle some of them here in the beginners class also. So those that we didn't handle will come in the advanced class, and that is for people who are truly interested in trading. But the basics that we gave you, anybody can develop that, work on that, and still be very good. Sorry for that call. Okay, so let's go back to our chat. So I'll show you on trading view. Where's my trading view? Yeah, it should be here. So this is trading view. Yesterday I was able to analyze BTC for you, showing you how based on the topic we had, which is sorry for this course. Let me just sorry, I just put those phones on silent. So we handled bull flags. We handled flags and pennants yesterday. Either bull flag, bear flag, bull pennant, bear pennant. Okay, we handled that yesterday, and I was able to draw it for you according to what was happening in the market. As at yesterday, we were able to connect 2 points. One of the points was inside this big candle here. This is actually 4 hours candle. So let's go back to, let's say, 1 hour candle, because it was one hour time frame that we used actually. So this is the 1 hour time frame. Let me see how I can make this clearer. Okay, I think it's clear like this. So we're able to connect 2 dots that yesterday, okay, because the events were not actually that clear as at that yesterday. This was the first place we connected, the second one we connected, and during the course of that training, the price moved and hit our support line here and bounced back. As you can see, it was just accurate, like it bounced back. And look at it from that yesterday. Anybody who knew, who understood what we thought about this support line and the resistance, about bull flag, because this is actually a good example of a bull flag, okay, would have been able to take some good profit in this coin. Look at where that price hit. It was at around 7,380, okay, but right now currently it's trading at 7,591. And that is good profit for someone who is doing leverage trading, okay. And from our analysis, we are still targeting that it's possible it's going to hit 85. It's a possibility, but like I told you, this is just technical analysis. The fundamental is also there, and one of the fundamentals is that we have the BTC halving that is coming up next month. That is a bullish news. But don't also forget the bearish news, which is the fact that we have a virus that is killing people around the world, and we don't even have a vaccine to it right now. So the impending, in fact, it cannot be avoided, the recession that is coming up. So it's possible that any market can just crash, and this technical analysis will just be waived, and the market will just tank. So that's why I told you have to pay attention to your fundamentals, your technicals, and your sentiment analysis. You get to know more, like deep, in depth, about how we manage this whole thing in the advanced class. So as you can see, when we taught you about bull flag, we told you that for us to all the features of a bull flag were actually found here. The pole, right? The fact that it was making lower highs, right, as at this period before the breakout. So what was actually remaining that yesterday was the breakout, and we told you the breakout is when it breaks above this resistance line. So, and we also told you that not just about breaking this resistance line, we also believe that when it breaks it, it is not a confirmation that you should enter, but when a candle opens and closes above the resistance line, And we've been able to check that, and we saw that truly a candle has opened and closed above the resistance line. So this is it. This one didn't open and close, but this did, this one did, this one did, this one. So this line becomes support. This line, which used to be a resistance, becomes the support right now. Okay, it becomes the support right now. So we're expecting this coin to move like another leg up, which should actually get to, let's say, 8,500, but I am targeting to take profit around 8,200. Okay, coupled with the fact that we have a positive news out there, which is the BTC halving that is coming. Previously in other halvings, Bitcoin used to make like good rally before the halving and probably after the halving in some cases, depending if we don't have issues after the halving. So based on that, remember we're using the past to predict what's going to happen in the future. So based on that positive news, I'm expecting that since my technical is good, my fundamental is partly good, the only thing I have to pay attention to right now is the fact that we have a virus that is killing people, and it's possible that it's going to affect other markets, and if it does, there's probability that it might also affect the crypto markets. Okay, so I pay attention to my fundamentals, that's all. So that is it about this. Let's head back. So we are talking about the technical analysis. A lot of things we've taught you about candlesticks in the beginners class, though it wasn't practical enough, and we cannot handle that now. It's for the advanced class. You get to understand these different candlesticks and how to read them. Okay, but yesterday we were able to handle bull flags, bull and flags and pennants. So today I'll also show you some of the tools that I also use under the indicators. Okay, these indicators are the tools you can use to determine what's likely to happen in the market. So right now, let's go to the indicators. The first one I would like to talk to you about today is the Stochastic Rsi. The Stochastic Rsi. Okay, but before that, let me talk to you about time frame. Now, first of all, you have to determine what kind of trader you want to be, or you are. You are either a short-term trader, a mid-term trader, or a long-term trader. For example, the company I'm looking at, establishing, okay, we are not there for the short term, it's for the long run. We're buying, shares that we can live for the next 40 years. That's not something and that's why I told you I'm studying someone who has done it before, and that is the Oracle of Omaha, of Berkshire Hathaway. Okay, but as it relates to the crypto space, I do not attach myself 100% to long term in the crypto space. I basically trade here, make my money and move, but I also have long-term investments and mid-term investments. But for trading, I don't attach myself, my emotions to this. I take profit when it is right, I move out when it is right. It's that simple. So if you are able to determine that, what helps you to analyze properly is the time frame. And that's why when we started in our beginners class, I told you that we believe in abundance. Anybody can make money here. People who are in the long run, like for long term, they will leave their money in this market. They don't care. We who are doing the short term will play with that money that is in the market, pull out what we can pull out, put in what we can put in, just like that, and the market will still stay there. Everybody becomes profitable because everybody does not trade in the same time frame. Look at all these time frame, and this time frame are just for these free accounts. For our advanced class, we'll be using a paid account, so you get to understand this whole thing. You get to understand the fact that you can actually customize your own time frame depending on how you want it. So we have 1 second time frame. We'll click on it so you see how it works. Oh, he said the second interval is available only to premium members. Okay, so let's say 30 minutes time frame. 30 seconds. Okay, second is actually to premium. Okay, let's go to minutes now. For 5 minutes time frame. See how that looks. Sorry, I have a very poor internet this period. So this is the 45 minutes time frame. Look at it very, very well. If you are using the Bollinger bars, you can see it's actually trying to maintain the Bollinger. See, it moves up, down, just trying to be inside this band, though it moved out of the band here. But as you can see, this is a wick. bounce back into the band. So anybody, when I teach you about Bollinger, can actually use this to also make profitable trades if you are scalping. So looking at the 45 minutes time frame and looking at what we drew as it relates to the bull flag, you can see that on 45 minutes time frame it is trading above the resistance line. So you can successfully say that this has actually broken out. It has broken out. So we are looking at this line that used to be a resistance becoming a support line. So your stop loss could be just a little bit below this line, okay? And a little bit below this line is around 7,500 thereabouts. 7,500, 7,490 or thereabout could be your stop loss for this trade. So if this becomes a fake out, you'll be safe, right? But if it's not a fake out, it's possible that it is going to hold this support, this line here, which used to be a resistance, becomes a strong support. And that's for 45 minutes time frame. So for people who are scalping, use the shorter time frame: 45 minutes, 30 minutes, 15 minutes, 5 minutes, 3 minutes, 1 minute, and for day traders. Then for people who are on the midterm, you start increasing to hourly time frame, like 1 hour. I taught you with 1 hour time frame. Okay, on 1 hour time frame, you can see that a candle has actually opened and closed above this flag, right? Which goes to say that you can successfully see that it has broken out. We're expecting the move to come anytime. It might not be soon, but it's gonna come. Okay, so that's it for 1 hour time frame. You can switch to 2 hours for people who are doing, let's say, holding a coin for like weekly or maybe 3 days or thereabout. You start increasing your time frame. Okay, you start increasing your time frame, so that, because on a shorter time frame it can be bullish, but on a bigger time frame it can be bearish. And if you want to hold for, let's say, 1 week, and you are just checking the immediate thing, just like somebody who is just checking for the now, you want to get what you want to get now and forget what's in the future. You want to have a contract that can lead you to maybe the Minister of Work, and then you just meet a director in the ministry and you want to do something with him. You do a deal with him. You now take a deal that is worth, let's say, 100 million, but the general deal you are looking for is worth 5 billion, and in that deal you took all of it. You did not give him anything. You did nothing, like, you just want to take everything as if that is the end of it all. That person might block you from getting to meet the minister and be able to get that deal of 5 billion. Okay, so that means you are just focusing on the now and not looking at the future. That is how it is for somebody who is looking at getting something big, like big money from big moves, and is just checking all these small time frame, 30 minutes, 45 minutes, and so on. Those can also help you if you want to follow a big move, to determine where your entry will be, like to get the best possible entry. But you shouldn't use them to determine where you think the market will get to, because it's possible they will give you a fake signal, okay, based on the fact that you are trading on the long time frame. So this is 2 hours time frame. We have 3 hours time frame. Let's look at it and see how it goes. On 3 hours, we've also seen a candle open and close above the resistance line. Okay, 4 hours. Let's go to 4 hours. Candle has also opened and closed above the resistance line on 4 hours. It's also a good thing for us. So on the daily, let's look at 1 day time frame. Okay, on daily, we've not seen a candle open and close above the resistance line. Okay, but we have like 8 more hours to have another candle, and I'm hoping that next candle that will come after 8 hours is going to open and close above this flag, and that will confirm on the 1 hour that we've actually had a breakout. We understand that. So that's why it's very, very good for you to check different time frame to understand, and it's going to help you to determine whether what you are calling a breakout is truly a breakout. Okay, so that's it. This is for weekly charts. It's not looking so good here, probably because of how I arranged this chart. Okay, let's switch back to our daily time frame. And we also have monthly, we have yearly. This whole thing. Okay, so after checking your time frames to be sure that these things are in your favor, like I told you, we are actually using the bull flag to determine the next move in the market. But like I told you, you don't just depend on one indicator or one tool to determine how the market is going to. You are going to get a confirmation from other tools, and one of those things, the best place to get those things are using the indicators. And I showed you some of the indicators we have here, a whole lot of them, but you cannot access all of them until you pay. But basic ones you can access. So I'm going to teach you based on the basic ones here, and the first one I'll talk to you about is the stochastic RSI. The stochastic RSI, let me just remove this. Let me remove. Good. I'll also remove the Bollinger. Let me remove the Bollinger. Remove indicators. So we have a plain chart here. So let's say I want to apply the stochastic RSI and use it to determine what's actually going on in the market, or what decision I should take in the market. Okay, the chart actually looks very nice like this without all those tools, but let's add it. So I just click on indicators, click on stochastic. We actually have RSI and stochastic. We have normal stochastic, and we have stochastic RSI. Okay, and we also have the RSI, the relative strength index, but I like to use the stochastic. So stochastic RSI, when you click on it, you see what happened. It comes up. This is the stochastic RSI. So you use this to determine what's going on in the market, like as one of the tools, indicators that help you to understand what's going on in the market. So let's get down to the explanation. So the stochastic RSI helps you to determine if the market is overbought or oversold. By oversold, when something is oversold, what do we say happens to the market? Everybody's selling, everybody's selling, everybody's selling. It becomes oversold. It becomes cheap, right? Remember, when people are selling, market is going down. So when it gets down here, it becomes oversold. But when it is overbought, everybody's buying, everybody's buying. It gets up here, it becomes overbought, right? So that means the price is actually very, very high here. So you're actually supposed to buy when it is oversold, sell when it is overbought. That's it about RSI. But I think Investopedia did it very, very well. I also give you the numbers. Usually for stochastic is between 80 and 20. As you can see, this is 20. So when it is below 20, you can actually say that the market is oversold. When it is above 80, the market is overbought. Okay, so right now, where do you say the market is now? It's actually above 60, around 68 or thereabout. So it hasn't actually gotten to that stage of overbought. Okay, but it's close. So what it's indicating is that you should be prepared to actually sell. For those who are doing on a shorter time frame anyway, you should be prepared to sell off. Okay, because the market is going to correct using the stochastic. But you don't use the stochastic alone, because remember, this blue flag is showing me a bigger move. So I cannot use, because of the stochastic moves here, the small moves is going to make, to now determine and just get out of the market. Let's say maybe this market gets to 7,700 before this gets to oversold. Before this gets to overbought, right? Then I'll now move out of the market, forget my target of heading to 8.5 or 8.2 or thereabout. You understand it now? So you will have to pay attention to the bigger move and not just your stochastic. So the stochastic helps you to also pick points. For example, you want to be riding the waves as they come, then the stochastic helps you. As you can see from here, look at this place that I was oversold, right? The market jumped to this place, down to like 7,420. So somebody can enter from here and look at the move that it made. It made all the move all the way to 7,600, where it became overbought. Then he had to retrace. Now look at the small retracement it did, okay, to 7,500. Then it bounced back. It didn't retrace very well based on the stochastic. He had to, bounce back. That's another thing about the stochastic. There's no strict rule that it must hit 80, go back to 20. No. As you can see from here, look at what happened there. In this move, yes, it was very okay, and then it dropped. The drop was not as big as the move itself. Okay, so stochastics cannot actually show you the gauge, the extent to which that move can go, but it will just show you that there will be a move up or a move down, but the extent it cannot tell you. That is why you have to use other indicators to detect that. For example, this blue flag that we're using here, and other indicators I'm going to also show you. Okay, so let's go to Investopedia. Let me show you, read about, show you what's the theoretical aspect of this overbought and oversold indicator, which is the stochastic RSI. The RSI also is almost the same thing. It's just the numbers that is different, okay? And the speed for RSI is between 30 and 80. For stochastic RSI is between 20 and 80. The points, okay? So identifying stocks, in our case, it is crypto we are talking about here, that are overbought or oversold can be an important part of establishing buy and sell points for cryptocurrency. Okay, so and let's read what it said here. It said, though overbought and oversold certain indicators are bound, some are more effective than others. So let's look at the RSI, relative strength index. Two of the most common chart indicators of overbought oversold condition are relative strength index and the stochastics. Okay, blah blah blah, people who introduced it. So the numbers fluctuate between 0 and 100. So for you to say that it is overbought, now this is the key takeaway. Say overbought and oversold indicators are bound, but RSI and stochastics have stood the test of time. Relative strength index indicator indicates overbought condition when it moves towards 80, just what I explained, but this is for RSI, when it moves towards 80. Okay, when it is above 80, you can confidently say it is overbought, and when something is overbought, it means the price is actually expensive. You need to sell. Okay, you need to sell at that point and wait for it to get back to oversold region. And oversold condition when it falls below 30, it means that people have actually sold off so much that the price is now cheap and you can actually buy from here and follow it all the way up again. So when RSI is computed using average gains and losses, stochastic compares the current price to its range over a given period of time. RSI and stochastics are available on most certain applications. The default setting is 14 periods, which can be days, weeks, or months. So that is it about that. For stochastic, it's the same thing. It's just the numbers. For stochastic RSI, it is between 20 to 80. Okay, when it is below 20, you say it is oversold. When it is above 80, you say it is overbought. So overbought is when you are actually supposed to be looking at selling your investment. Okay, looking at selling. Okay, you either sell to take profit or sell to hedge, waiting for the market to come back again to a support zone, which the RSI also helps you to detect, which is when it gets to the oversold region again. And the oversold region is at 20 and below. The overbought region is at 80 and above. Okay, so that is it about this. So you don't have to worry yourself about this whole thing. If you you want to be trading altcoin, there's a very good tool I have for you, which is called the RSI Hunter. RSI Hunter, yes, RSI Hunter is a very good tool. Been using it since 2017, I guess. So it actually shows you all the coins that are oversold and those that are overbought, and gives you details about those coins. As you can see, these are the oversold coins. Like we told you, oversold is when it is below 20. Okay, then it is 20 and below. Okay, and it shows you the point it is at. This one is at 12. It's seriously oversold. This one is at 20. This one is at 21. Okay, they're oversold. And these are neutral. Neutral, probably those are in the middle, 40, 60, right? So these are the neutral. This is 40, 40, 40. And this is BTC DLT, link, RDN for RSI, then the overbought. Okay, the overbought, this thing, I think they have modified this too. It's been long I used it actually, since I can be able to detect it myself. I think they have modified it now. You have to pay for you to be able to see the overbought coins. That's a way for them to make their money. But when I use this tool, and I was still growing those days, 216, 217. When I used it, I couldn't like check all the indicators. So when I just come to RSI Hunter, I pick the coins I want to analyze based on the RSI. I pick them and then use other indicators to also check if I should go in or if I should sell off the coin. So, but right now, it's been a long time coming and they've been doing their modifications. So that is it about RSI Hunter. You can also check them out and see how it can help you. So we're done with the stochastic. Let me rephrase. Stochastic is one of the indicators that can show you when to enter and exit the market. And the two key phrases you need to know about stochastic is oversold and overbought. When something is overbought, when you say it is overbought, it means that the price has gone so high that it needs a retracement, it needs to correct. Okay, so if it is overbought, for example, in December period, let me use rice for example. During December period, you can say that rice is overbought during December period because people are actually buying it high because the demand is very, very high at that time. So when it gets to that time, when you are about approaching the peak of it, what do? You sell off. So you do whatever you have to do to sell off before December ends. As at October, price starts going up of rice, just like this. Start moving. Everybody's buying. They don't care about the price. They just want to buy. So towards the end of December period, after Christmas, it starts getting to this. It goes above 8. The last celebration, which is the New Year, after the New Year, it starts tanking. So you should do whatever you can to dispose of your rice at this overbought region once the price hits above this 8, okay, so that it will not dump on you, because the rice you bought for 10,000 naira per bag can actually later sell for 6,000 naira per bag, maybe towards February, March. Okay, so this is the period you should be taking profit during the overbought region. And the oversold region is somewhere here, when after the December period, the new year has come and gone, the demand starts reducing, the price is very, very high, people are not buying, and then people who are holding it, like those who bought trailers of it and they couldn't sell off because they've already made profits and they know that price will keep going down, they start selling it for cheap. As they're selling and the demand is still very, very poor, it keeps going down, it gets to a place where the equilibrium price, where both demand and supply will now meet and say, this thing is now too cheap, so let us start buying. Okay, that is where you can say it is now oversold, and at that time you can start buying. Okay, so you don't just use the stochastic alone, you have to combine with other indicators and other tools to be able to get the maximum profit from your trade. So that is it about the stochastic. You know the numbers 80 to 20 for stochastic RSI. For RSI alone is 80 and 30. So that is it. I believe that with this small knowledge, you should be able to start using the RSI and the stochastic RSI. For those who will go into the advanced class, we're going to break this down, into pieces for you and how to use them in your trade. But let's see, apply it a little. As of yesterday when we were doing that training, this was where close to the, I think somewhere here. Okay, then look at the RSI as I yesterday on 1 hour time frame. You see that it was actually oversold. So it confirms the fact that there is a possibility of this coin going up. So it hovered around here, went down, up, down before the real move, which is from here. Okay, that was on 25th. I think today, early hours of today, it started moving. Okay, started moving up. We got to the overbought region, sorry, and then it now bounced back. And look at it. Yes, something else you have to also know is on the line crossing. When you actually know, like during that December period, like when I explained using rice, it's possible you will not detect when price will start tanking, because it must not be after New Year. Sometimes it's immediately after December, sometimes it's even before December, like 24th or 23rd, price will start going down. So how do you detect when exactly price will go down? Okay, it is the crossing. Whenever the blue line crosses the red line, it means that price is about to start going up. Look at it here. This red line was actually above the blue line, but immediately the blue line crossed, price started going up. Now up here above 80, you do not say, let me just enter. You wait for the crossing. So once this red line crosses above the blue line, then that shows you that the market is now ready to now retrace back, to correct. So that was the exact point that you should be thinking of selling if you are someone that needs confirmation. Then something else you need to know is that if you don't get that confirmation, you know that a coin can stay in this period, in this overbought region, for like a week if volume does not come in. So it's best for you to get that confirmation if you truly want like fast action. But if you're somebody that have the patience to trade, so no problem, you can enter once it goes above the overbought region. Okay, so that is about the stochastic RSI. Let's talk about Bollinger and we close this session because it's becoming too long. Every other thing would be handled in the advanced class, like pieces it for you to understand. So for you to apply the Bollinger, you still go to your indicator and search for Bollinger band. Bollinger. So you click on Bollinger bands, and that's it to be applied. Close this. So the bands, the Bollinger band is just these two lines you see here, and then that one line in between. Okay, let me explain how this works and how you can use it to trade profitably. Bollinger band is one of the indicators that helps you. Oh my god, look at the breakout. Look at the breakout. Can you see the breakout, people? Can you see the breakout? See the breakout I was talking about. This is actually 7,673. Okay, let's see how high it got. 7,700. Hold on, let me check on my trade and I continue this, please. Okay, so I rushed and took profit on my short-term trade, and as you can see, the thing tanked back to 7,576. That's how this whole thing works. But I'm still holding my long-term, my trade for 8,500. Okay, so wait, and let's explain this Bollinger band to you. It's one of the indicators you use to determine how the market will. I'm going to use baby pips to explain it to you. Bollinger band was actually popularized by a man named John Bollinger. It's one of the measures used to measure market volatility. So basically, this little tool tells us whether the market is quiet or whether the market is loud. So when the market is quiet, the band contracts, and when the market is loud, the band expands. So let's explain that using the chart. By expansion and contraction, look at this place. This is expansion. Look at this whole place. This is contraction. Okay, so the market was loud here because of this whole big move here, and the market is quiet here because it is the consolidation period before the breakout. Okay, so that is it about that. Let's continue. So notice on the chart below that when the price is quiet, the band are close together. When the price moves up, the band spread apart. So the band is just like a rubber band. It expands whenever there's a big move in the market, either down or up. and it is quiet, like when the volume is very, very low. Okay, so in this chart you can see that whenever the price makes a move either up or down, in this case it was up, the band expanded, and I showed you also in our BTC chart, as at this place when he made that move to 7,700, it was a very big expansion of the band, and after that the consolidation period, the band was now tightening up. Okay, now look at this. Let me also explain our last class to you. You see, after this big move here, when this dump came, what happened? He bounced just on this resistant line, which is now a support, and this is where it is resting right now. We're hoping it's not going to break this, but if it breaks it, your stop loss is somewhere below here to protect you. But from my own observation, I think it's going to respect this line. It's going to respect this line. Okay, it's going to. This particular time frame, 1 hour time frame, is ending in the next 30 seconds, and another candle will be formed here. When another candle is formed, I'm hoping it's still going to maintain this, like, see trade above this line here. Okay, and these are both flat. So let's wait and see in the next 10 seconds, see where this candle is going to open, if it's going to open above this flag here. Okay, so that's it. Another candle opened above. Can you see that candle here? 1 hour candle opened above. It opened above, so we are hoping it's going to be bullish again. That's the breakout. Okay, so let's continue with the Bollinger band. When it expands this way, know that a very big move has happened, either up or down. This one was up, this one was down here, but this was not as big as this move. So now that it's tightening, it's actually suggesting that it's possible that another big move is going to happen. But the squeezing of the Bollinger, most times it takes time before the big move comes. Okay, so let's continue. So the Bollinger bounce. One thing you should know about Bollinger band is that price tends to return to the middle of the band. That is the whole idea behind the Bollinger bounce. By looking at the chart below, you can tell us the price might go. You can tell where the price might go next. Now that it has touched the end of the band, the next place is for this band to come back down to the middle of the band and probably break it to the center. Now let's look at the band here. Look at the band here. The band is this line, this blue line you're seeing here now. Now, as at this stage, when he made this pump, he moved above the band. Okay, he moved above the band, he retraced back, and now it traced the middle of the band. The middle of the band can also serve as your support. I want this chart to be clear enough. Okay, there's one small thin line, this red line you're seeing now, it can serve as your support. Now it broke that band, right, and it's trading below it. It's possible that the next bounce would be at the lower arm of this band, which is around 7,464. okay, before it will bounce back up, or it can go up, okay, and trade above this middle line, then start another move up. So that is for the Bollinger. It helps you to detect where price is going to go. As at that time when price hits here, anybody can predict that it's possible that price will have to bounce back before it will make another move up. But one thing about Bollinger is that you cannot be sure, like 100% certain, that it's going to work out that way. You know why? Because this band expands. It expands. So as the market moves, it's going to expand to accommodate the move that has happened in the market. So as at this stage, remember, the price hits the upper band, and what it suggests is that you should sell here if you are to follow the rules of Bollinger. But look at what happened. The price kept moving, it pushed. So somebody who sold here actually sold at around 7,200. But that was just the micro move. The macro move, the bigger move, was actually starting at that time, and then it moved, expanded, moved above the Bollinger, you traced back, entered back into the band. But if you had waited, you would have made good money here. So how will you know if you shouldn't sell as a when price just hit the band? You should use other tools like the RSI. If you had watched very well, the RSI as at this point has not gotten, as at that time it hit the band, has not gotten to the overbought region, and anybody would have used that to say that it's possible that this market is still going to give us more. And when did I say you should be able to sell using the RSI? Whenever the blue line crossed, and this is where the blue line crossed, and that was after this whole move during this consolidation period. Okay, that was a good time to have sold using both the RSI and the Bollinger. So that is it about the Bollinger. The points you need to know about the Bollinger is the down, the middle, and the up. Okay, the down suggests that there will be a bounce. Okay, whenever price hits this ground aspect of it, this lower band, price will bounce back up. So you should use this lower band as your buy signal. When it hits this middle price, most times this middle line here serve also as resistance point, but not too strong in some cases. Okay, let's look at where it was able to bounce back after hitting it. Look at this one. It hit it, it bounced back before it now broke it. Okay, so some people can use that. If you're trading on the shorter time frame, you can use it as your take profit. And if you really want to get it big, like the bigger picture, you should be using the upper band. So whenever price hits the upper band, you should be using that upper band to take profit. For example, if I had wanted to take profit on this move, I would have used the Bollinger to determine where to take my profit. How? With this, I can actually know where the price will get to, and I take profit, which was around 7,609. So I would have taken profit here. It actually hit it, went above, and went to 7,700. But look at what happened. It retraced back. So if I'm trading like I'm scalping here, what would have happened? I would have taken profit at 7,604 or thereabout, and I would have bought back here, down here, okay, at let's say 7,500 or 520 or 530 in between. So I'll be buying cheaper and then following the move up. But most times when you are scalping, you might miss the bigger picture where you're chasing the small picture. So I don't really scalp when I have a big move to catch. Okay, and as you can see, even after the pump here and the small pump here and the dump here, it still maintained our line. You look at this place, it broke it down, but it didn't go far. That was why I said place your stop loss below the support line, because this week can actually hit someone's stop loss, close your trade, and market starts moving back up. So you have to use your brain, because these people are also watching places where you placed your stop loss. So some people you have to place it a little below that support line, so that when this sharp move comes, it will not just go and hit it and close it for you, hoping that it will go down, then price will now start bouncing back up again. So that is it for Bollinger Band. I don't think there's more. If there's more, you will get to understand it in the advanced class. But before I go, let me just explain the squeeze for you. Now, the Bollinger squeeze is pretty self-explanatory. When the band squeezes together, it usually means that a breakout is getting ready to happen. Is getting ready to happen. And that is what is happening here. Look at this band. It's squeezed so tight. So tight. So whenever it squeezes, what happens? It suggests that the breakout is getting ready to happen. But what it will not tell you is whether that breakout is going to be up or down. So what do? You use other indicators to suggest whether that breakout is going to be up or down. For example, the stochastic. Another example, the candlestick formation, and bull flags, bear pennants, or just pennants and flags. You can use it to suggest exactly where market is going to go. So yesterday when we talked to you about flags and pennants, we were able to identify that this is a bullish trend that is going on, and we expected it to continue based on our analysis. Okay, so now that the Bollinger is squeezing, we are hoping that the next breakout as it relates to the Bollinger will be in the positive. That is an upward move. So let's watch out and see how it goes. Look at this place. After this whole big move here, let me go up so you see. After this whole big move here, what happened? There was a squeeze here. There was another small opening, and that was a small pump here. Okay, there was another squeeze here. What happened? Another opening, and there was a dump. Okay, so Bollinger squeeze doesn't really tell you whether it's the move is going to be up or down. It just predicts, like tells you that there's a possibility of a breakout happening, either positively or negatively. So it's possible that as this squeeze is happening here, that market will just tank, like go down, or market will go up. So, but I used other tools to detect that there's high possibility that this trend, this bullish trend, is going to continue. But I also have my stop loss in place in case if this is not the case. Okay, if it goes otherwise, I'll still be safe. So that is how this whole thing works. I'll stop here for now as it relates to the Bollinger. Let's go to our PowerPoint and see other things that we've not talked about. So we've been able to talk about the fundamental analysis, the technical analysis, and the sentiment analysis. Let me talk a little bit about that. Now, the sentiment analysis is all about gauging the sentiment in the market. What do you think the generality of the people in the market, have in common? Do they have greed in common, or do they have fear in common? Okay, if people, like, if you look at the market now, everybody is yearning for the market to move up. People want the market to move up. Not everybody anyway, but the generality, they want the market to move up. So that is the idea of the sentiment analysis. So it's possible that your fundamental analysis is right, your technical analysis is right, or your sentiment analysis. For example, the fundamentals and the technical are telling us now that the market is going to move up. But the sentiment, what if the sentiment is that people are afraid that this coronavirus stuff that is everywhere might not allow the market to move? And even when their fundamental and technical is good, because we have a good fundamental, which is the halving, and the technical is good, but the sentiment, it's still possible that generality of the people in the market are thinking about the virus, and they don't want to expose themselves too much because of the economic meltdown that they've been in the previous years. Like, we used to have meltdown almost every 10 years now. So a lot of people have seen that, and they feel like the best way they can do is whenever it's about to start, they'll protect themselves. So they might not be pushing in money into this place. So the technical and the fundamental might be good, but the push that is needed is from people. They'll you need that greed aspect of it, that fear of missing out, of everybody rushing in to buy, for there to be a very big move. It's not like there won't be move, there'll be move, but it might not be as big as it's supposed to be, because the sentiment analysis, the sentiment in the market is actually that market will not actually go far, that the world is in a crisis and everybody will have to be safe. I remember in periods of crisis, the first thing people do is try to be safe. That's why you see people laying off their staff, declaring bankruptcy, closing down businesses, just to save their own family, because they want to have enough money to take care of their own family before they start talking about business or taking care of employees. But that's not how it's supposed to be anyway. So the next thing I'll talk to you about is CryptoSuit. CryptoSuit is actually a software that I use for CryptoSuit. Okay. I use this software for arbitrage trading, and I also use this to detect coins that I put my money in, like when I was doing shit coins. I know Jojo explained things about altcoin to you, and I'm going to give out this app for free. So I paid for this app, actually, lifetime version. I'm going to give it out for free for people who are going to subscribe to the advanced class. And this app is very, very good for different kinds of training. As you can see, it just pulls out the top gainers, top losers, and picks coin for you, which is the coin pick. So in this pick, it picks coins that you can buy, hoping for a very big move. If you can, see if you can just copy out these coins from this video and watch it in the next 5 days, and you'll see that some of them will still do some good wonders, like this 4 grid. So the idea is I cannot go and be buying this Ethereum Meta that has done 933%. It's already high. Okay, it's already high. It's already high. So I can decide to buy this Fogri coin engine because it's still starting out. Digibyte, Unibright, they are all still starting out. Noah coin, okay, and so on. But another thing I watch out for is the market capitalization. You don't just go and buy coin because you think it's going to go up. The market cap shows that yes, these people have a project that people are interested in. As you can see, their market cap is not really bad. At least the list here is $43 million. Okay, but look at this Hive. Hive is something that you can work on. You can look at. Not like you should go and buy, but you can put it on your radar, knowing that it's one of the coin pick and it's possible it's going to do wonders. And it has a good market cap, 160. Not like a very perfect market cap, but at least it's still okay. It shows that some people still believe in this project. Digibyte has been an old one. It's been an old one. I traded it back then, I think 2017. I traded it before they delisted them from the major exchange. So I didn't care about them anymore. So, but it's an old coin. So, and I think it's still trading very, very low as at the price they issued during their ICO. I think it's still very, very low. Or the price it was trading during those 2017 the bull run. I think it's still pretty cheap, and you can analyze it and see if it's a coin you want to put your money in. So, but I have my own trick. I have my own tactics of picking the best out of this and using it to my advantage, which I'm going to teach people during the advanced class. Now, and also this top loser is also somewhere you should pay attention to. But like I said, market cap. As you can see, all the top losers here, they have a very, very poor market cap. Very, 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 very poor market cap. None of them is even in the millions. And I don't invest in those kind of coins. So, but this kind of coin can still give you money for people who are doing betting. I don't bet, okay? I don't bet. They can move overnight and they can still drop, like you can see 88% loss. That's not the kind of thing you want to see yourself in. Now look at these top gainers. I bet you some of these top gainers used to be among the coin pits as at yesterday. I tell you the truth, as at yesterday and day before yesterday. And look at where they are. The list is in 300% profit. Okay, so this can be an alternative to ICOs, as at when we are doing ICOs, when people will be bringing, let's say, $50 and putting in different projects, hoping that they are going to rise. Let me see where Bitcoin is right now. Okay, so hoping that it's going to rise. So anybody who would want to use this, I can teach them, privately on how to use it. You can be using, let's say, $5 or $10. Remember, if it's $10, imagine 300% of $10. It is something you cash out, and if it tanks, then it's just $10. It's nothing much. Okay, so but I bet you with what I'm going to teach you and how to use this software, it's going to be super profitable to you. So this software also helps you to identify the total market cap. Yes, you can get this in coin market cap, right? The total coins, Bitcoin share. Bitcoin is actually at 63% of the market share right now. So 24 hours volume is at 126 billion. This also helps you to know the volume of money in the market in the last 24 hours. The move that is going to happen. So there are a lot of things about this software. The arbitrage is also something that is very, very interesting. When you click on this arbitrage, it shows you the platform itself, and you'll be able to choose different coins and see where they have an arbitrage opportunity. This is BTC USD. As you can see, the differences here is not much. It's not much. I think the highest here is at 3%, and this 3% is between BitBay and Bitcoin. So you say you can make a profit of 3%, 3.2% by buying BTC for USD at 7,420 from BitBay and selling them back at $7,664 at Bitcoin. So that's how it works. So all you just need to do for this arbitrage is for you to register with BitBay and this Bitcoin. You buy from Bitcoin, you sell at BitBay. Some days you see like 10% move, but these days arbitrage is becoming harder and harder because exchanges have gone into it. So you need to be sharp Most times when you send coins to this other exchange, those exchanges will delay the confirmation, and before it enters, price has corrected. So it's something that you have to be very, very careful with, and only those who make the advanced class will get that very class, like the top of it. So look at the coins, all the coins that are here, all the coins that are here, all the markets that are here that you can look into. A lot of them, like you can see this one. Okay, this particular coin, you see what's going on in this exchange. I think I've traded this kind of thing before. What is happening here right now is that you say you can make a profit of 10% by buying game for BTC at this price from live coin and selling them back at this at live coin, right? So what's happening here is that the difference between the last buy price and the last sell price is huge. I was trading this kind of thing when back in the days when I traded in Makatos and thereabouts. So there's this coin they call Very. I traded like that, I think so. So what happens is that you can place to be the next buy. Immediately you place it and somebody buys, you place that same thing, that same market you bought as the last sell, and somebody might be willing to just sell to you immediately. Just buy from you, sorry, immediately, and you make like 5% profit or 10% profit. It happens, and that's exactly what's going on in this coin. If you go to Livecoin, you understand that now. But aside that, this game BTC also, you can make money with it using Livecoin and Bitress, and this is a very good one, a very, very good one, because Bitress is a known exchange and Livecoin is a known exchange. So you can buy from Bitress and sell them back at Livecoin and make 8% profit. So that's how this arbitrage works. Anybody who is interested in this, who makes it to advanced class, I'll teach you this like on a personal basis or like mentorship on how to use this software. So that's it about crypto suits. If you want to buy it, you can search it on the internet, or you can ask me for link, so I'll be able to get a little bit commission from you buying it. Okay, but I'm giving it out for free to people who subscribe. It's actually a monthly subscription software where I got lifetime access. It was huge, like the money I paid was huge for this software. So the last thing I'm going to talk about is on your trading strategy. What kind of trader are you actually? After you've taken the beginners class, you've taken the intermediate class, the first thing you need to ask yourself is, who are you in this market? Are you a long-term trader or an investor? Long-term investor? Are you a mid-term trader or investor? Are you a short-term trader or investor? And are you actually trading or you are investing? Someone who is investing is not predicting the high and low. Investment is all about buying something low and hoping that it will go high and you sell high. Buy low, sell high. That's investment. But trading, you're not just buying low and selling high. You can buy high hoping and still sell it low. Like if you're shorting the market, you bought it at 6,700 and you are predicting that it's going to go down to 6,500 or 400, and you still make money with that move. That is trading. So you have to determine those things. Are you investing or you're trading? And if you're investing or you're trading, are you a long-term guy, a mid-term guy, or a short-term guy, or all of the above? And if you're all of the above, you must have a book where you write down these things. And so when you enter a trade, you already have a plan ahead. Look at that market now. I had 2 accounts that I was trading in BTC. I saw that pump. I went there. It went from 6,500 something to 6,700. I met it at 6,600. I sold my short term, okay, and made small profit from that. But I still kept the other account because I'm hoping to take profit from 8,200, from 8,200 to 8,500. That is it about that. Okay, so I have a long-term account, I have a mid-term account, I have a short-term account. That is me. It cannot be you. So you can decide to be a long-term guy, to say, okay, I'm bullish on Bitcoin. Let me buy Bitcoin now, hoping to sell it when Bitcoin gets to 10,000. And nothing will stop you from keeping to that that rule until it gets 10,000. That's it. I have people who are like that, who bought Bitcoin as at 2016 or 2015, 2014, and they have not sold. They are still holding. Even after the bull and bear market, they are still holding. You know, people like Warren Buffett, that's how they made their money. They weren't interested in the shorter time frame. They were investing. Their portfolios that guy has held on to for like 40 years now, for like 30 years now, without selling. Imagine that. That's huge. That's huge. He has investments in Coca-Cola, and Coca-Cola is I think Coca-Cola is over 100 years. Yes, I think it's one of those old companies we have out there. Okay, and they are still holding their investment, believing in those companies. So now a mid-term guy can be someone who buys and sells within 1 week, within 1 month, within 6 months. It depends on what your own definition of mid-term is. And then a short-term guy can be somebody who sells within a day, within a week, within 3 days. It depends on what your definition of short-term is. Okay, and you need to ask yourself, do you want to be a trader or an investor? But I'll have to advise you, you have to be both. You have to be both. Yes, you have to be both. Because in trading, you don't apply emotions as to whether Bitcoin is going to get to 100,000, 1 million. It doesn't concern you. What concerns you is your profit. You need to make money. You need to make money. So whether it's going up or it's going down, you're making money. And you're not interested in that daydream that is going to get to 1 million. Now, if you get 1 million, you have an investment profile that covers that. Okay, so how I do it is I have a small investment, but I tell you the truth, I've been able to make more money in trading than in the investment. Because, for example, the ICOs that I did, those that did well, if I didn't take profit, if I didn't exit that market, I tell you the truth, my first car was through crypto. I bought my first car through crypto, and it was just one ICO that gave me that money, and I bought my car. Okay, and did other investments. So if I hadn't taken, okay, for example, I give you one of those coins, one of those ICOs that blessed me very well. I think Electronium. Electronium is trading very, very low from the ICO price, or from the price it got to after ICO, like it pumped very well. And we were able to sell off, get our investment back, get our profit, and use it to invest in other places and do a whole lot of other things. So if I were an investor, but what I actually did was I held some of them, and some of those coins is what I'm using, the investment aspect of it, to recharge my coin. When they now rolled out this idea of you being able to recharge from MTN, Airtel using their platform, so I was using it to recharge, do my data plans and all that. Okay, so and there are people who have also made serious money from investment also, because I know back in the days when I trained people from 2016, when I started this training aspect of the business. There are people that I trained that bought Bitcoin as at when it was 1,000 something dollars. Yes, I know. And some people I trained when it was around 3,000 something dollars. And some of these people that heed my advice, they took profit at $16,000. Okay, they waited it out and they made their money. And okay, on the investment aspect of it also, imagine someone that bought Bitcoin in 2010, 2011, and is still holding. He's still in serious, massive profit. So that is it. None of them is bad. None of them is 100% bad or 100% good. But what you do is be both a trader and an investor. Have a small portfolio for investment, have some portfolio for trading. Then along the line, you get to understand which one fits you more, and then you now focus on the one that fits you. For me, I'm more of a trader than an investor as it relates to the crypto space. I have investments. Some of them have gone down, some of them are giving me some profit, but the trading aspect gives me money on the daily, on the weekly, on the monthly, and that's what matters to me right now. So I'll be stopping here today. And the conclusion, the general conclusion will be in the group. That's where I'll introduce you to the advanced class and what you get what you stand to get during the advanced class, the packages we have for you. For those who wouldn't want to go to the advanced class, you can go for our mentorship or coaching sessions that will carry you by the hand and make sure you're profitable until you become a pro, before we can be able to leave you. And there's no becoming a pro, because you learn every day. I cannot call myself a pro right now, okay, because I still learn. That moment when you start calling yourself an expert, it's possible that your brain will start working on you, that you wouldn't be learning. Okay, that's what happened. Remember, when you remember things like BlackBerry, when you remember things like Nokia, when they fell, they were on top of the world, they were on top of the market. But I still remember what the CEO of Nokia said when, during their, I think it was their general meeting or thereabouts. He said they did everything they could do, but somehow they still failed. But I think they didn't do everything they could do, because when they were telling them to switch from Java to Android and all these new technologies that were coming up, then they were just believing in their old ways, and then the market swallowed them. We have Samsung, we have iPhone, Apple, we have Hawaii, we have Juni, like good companies that just sprang up that are bigger in shares right now than Nokia. But remember who Nokia used to be. So don't just say you've gotten to the top. There's no getting to the top in this game. You keep fighting, you keep improving, you keep learning. That's it. So I'll end here. I should remember myself, Mr. Joe. See you all in the WhatsApp group and have fun.